75.
Okay, that's how the equity market is currently looking, 75.04 on the index. But let's keep it with macros, and joining with Maithili Bhushnarumath, we've got Mr. D.K. Joshi, Director and Chief Economist at Crisil, now joining in on the show. Thanks very much for being with us. And Maithili, let's start off with you and wanted to talk about how much one should really look into these concerns with respect to the rainfall, the below than expected monsoon.
Well, yes, certainly the concerns, there seem to be more reason for concerns now than there was about a month ago. The initial forecast was not so bad, but as time goes by, it's pretty clear that we are going to have a deficit monsoon. The only consolation really is that we have enough stocks, but these stocks are really out of cereals. So we will certainly have a problem as far as fruits and vegetables are concerned, pulses, edible oils. So certainly going forward, I do anticipate food inflation to pick up, and once food inflation picks up, it has second order effects, and inflation will pick up across the board. And that makes it very, very difficult for the Reserve Bank of India to do anything but tighten policy, if not keep it, maintain status quo. And that becomes a little bit more difficult, certainly for growth. So not a very happy augury that the monsoon is deficit this year, but then that is something that the government will have to contend with. It's nothing that can do anything about, really, apart from remedial measures to ease the pressure on prices, to ease the suffering of the poor particularly.
Remedial measures which have to be taken by the government. Mr. Joshi, would you like to respond to that as well?
Uncontrollable risk, but you can mitigate them through some actions, and as Maithili was mentioning, use of food grain stocks is one of them. I think what government also needs to do is to track the developments in monsoons very closely, so that I think for July and August we need to be very careful how the monsoons are distributed. If things are going all right, then I think they need to be very proactive with imports, as well as I think the announcement that they made yesterday that they'll clamp down on hoarders. I think all these things will help reduce the upside to food inflation. I think that is probably the best they can do at this juncture. Apart from that, I think we need to very carefully watch out for how the rains pan out. As Maithili was also mentioning, the risks have only risen, and though Met yesterday said that some showers are expected in the first week of July, but I think clearly June has been a washout, and that has already delayed sowing of a number of crops. So it will show up in poor agriculture production.
Mr. Joshi, though the monsoon is a source of concern, I think at the moment all eyes really are on the budget. How do you look at the budget? The initial signs of the government biting the bullet were very promising when it hiked the rail fare and the freight rates. Subsequently, the rollback, the decision to extend the excise SOPs, etc. Does it seem as if the government is now getting cold feet and the budget will not see the kind of tough measures that are really required at this juncture?
Well, I think one of the lessons from the rail fare hike is that anything big bang, particularly which has an impact on prices, I think is unlikely. And what we might see is gradualism now. So we might still see some price increases in petroleum products, etc., but of a very gradual nature. So one-time correction, the kind of thing that was attempted in rail fares for the suburban Mumbai, I think that those things are unlikely, and I think clearly we'll see more gradualism at play even in the budget. But I think there has to be some clear indication that the subsidies are on their way, are going to be corrected, they are going to be reduced. I think, and that will be of a mild nature. I think that's what I suspect.
But would you term gradualism a luxury, or is it a realization that there is a political economy angle to it and it's something that we have to live with? Or at this is the best time for the government to take these tough measures in the first 6 months of its tenure. If it's going to be gradualism now, then what can we expect as far as the fiscal deficit is concerned, as far as essential spending, public spending is concerned? Where are we going to get the money for all that?
Well, I think they can definitely do big bang as far as I think improving the business climate is concerned. I think implementing the projects, giving clearances to the projects, I think that is where you require very swift action. I think where inflation etc. is concerned, I think if you have a path outlined very clearly, I agree with you that I think you need to front load, but I think not everything can be front loaded. I think that's the political reality. So I think some of the things will be big bang in nature, but others will be slow and gradual.
Okay, I think that is the reality of the Indian economy, the political economy angle. But if I can shift now to the Reserve Bank of India's financial stability report, how do you read the two signals that seem to be coming? One, on the one hand, they say that NPAs seem to be under better control. At the same time, they say banking risks have increased. So if NPAs have come down, how does the Reserve Bank of India really reconcile that with banking risks having increased?
Well, I think by banking systemic risk, banking risk increasing, they're talking of lower profitability, etc. But I think the good news seems to be that things seem to be bottoming out, I think, on all fronts. And I think with the statement that Mr. Raghuram Rajan made yesterday was that with the political stability, things will seem to be improving. So I think probably this is the worst is over, I mean, as far as the NPA and also I think the risks to the financial sector are concerned.
Mr. Joshi, you know, the banks have been protesting for a long time that with the rise in NPAs, particularly because the turnaround in the economic cycle, etc., they're finding it very difficult to make the requisite provisions and at the same time meet Basel III requirements. The recent move by the Reserve Bank to revise the definition of NPAs for infrastructure projects, do you think we'll see more of that, and is it something that is required at this stage?
Well, I'm not sure what will happen going ahead, but I think as far as the NPA problem is concerned, I think part of the resolution will also depend on the asset sales, etc. I think which is beginning to pick up. So I think it will be a host of things which will be done jointly, and I don't think there's any one solution. The best solution to this is a pickup in the economic cycle, which itself is, I think, is going to be a slow process. So yeah, I think we will see. We will see very slow movement out of this NPA rut that we are currently in, and my sense is that we could see some more announcements on this. As far as provisioning, etc., is concerned, we are quite comfortable. I mean, in the sense that the banks are adequately provisioned. I mean, right now.
You spoke about the economic revival being the best remedy possible. And talking about economic revival, how do you read the latest numbers emanating from the US? We saw initially the first quarter the economy was supposed to have grown at 0.1%. Then we got numbers saying that the economy actually contracted by 1%. And now we get latest numbers saying that the economy contracted by minus 2.9%, the lowest in 5 years. It seems a little like what happens to statistics in India. But beyond that, how do you read the US economy? Is it reviving or is it not reviving?
Well, I think U.S. economy is reviving. The first quarter has been a washout for two reasons. One is I think there was some data adjustment which took place in the inventories. I think that has moderated the growth. The second was I think the bad weather which the economy faced. I think in the first quarter. I think both of these together have led to this sharper than expected downfall in GDP. But I think overall the momentum in the U.S. economy is still there. I think the private sector is still buoyant. So our expectation is that the annual growth for US economy for 2014 will be around 2.3%, and so which essentially means that substantial pickup in the next 3 quarters.
Mr. Joshi, just wanted your views on how everyone's really has got high expectations from this new government, and do you think that the first step that they took with respect to deferring the gas price hike, taking a little more time on that, just needs to be viewed a little more practically, because they should be taking informed decisions on this? Instead, the market completely punished some of these stocks.
Well, I think these are very sticky issues, and I think that difficult to resolve. So I think I agree with you that I think you need more informed decisions. I think more debate on this, and but I think 3 months is a reasonable time to resolve this, which government has promised.
Maithili, in that vein, do you think that the way the markets really reacted to this news was a little unwarranted?
Well, markets always tend to react extremely in one way or the other. Markets are not really measured by nature. But beyond that, I think since it is a decision which has implications for a number of years going forward, it's important that the government gets into the matter clearly and takes a decision and then doesn't do a flip-flop. Because what corporates dislike most of all is policy flip-flop. We saw a lot of that under the earlier UPA government. So I would not mind if the government takes its time. In fact, the same way I was very unhappy about the way the railway hikes were rolled back, because the railway hike was warranted. it. It was overdue. Once you take a decision, it's important that you stand firm. So it's better that the government takes its time, takes a decision, and then sticks to its guns rather than takes a decision, rolls back under pressure. That is far worse. But beyond that, it is important that it doesn't take too long over it. 3 months, 6 months, but not too long. So I think you have to balance the two. How much time, how much do you get into it? And once taking a decision, then you just have to stick to your guns.
And finally, Mr. Joshi, just wanted a word from you on the currency, because while we do have a favorable political backdrop, strong expectations from the new government, on the other hand, there's that structurally high inflation as well as the stagnant global exports, which seem to be playing a little bit of spoil sport. So in this light, how are you seeing the currency shaping up?
Yeah, I think you also need to watch out for what happens to oil. I think because that's, I think that can, if oil remains weak, I think that can push, make currency weaker. But I think our call is that I think 60 seems to be the fair value, and it will hover around that, I think, for the rest of the year with some geopolitical or other risks, maybe taking it beyond its fundamentals, and then I think Rupee tends to come back to its fair value. So I think our expectation is Rupee at 60 by March 2015. So I think that's we are going by the current value, and assuming that I think there's not going to be too much disturbance from the global side. And as you rightly pointed out, I think the pull factor of the economy has improved after a decisive election mandate, and I think so, which is healthy for capital inflow. So even I think even if current account inches a little bit up this year, I think we can still hold the currency at around 60.
Okay, Mr. Joshi as well as Maithili, thanks so much for joining in on this discussion and taking us through all that's happening for the macroeconomic situation in the country, expecting the rupee at 60 by March end, and US GDP growth seen at 3% as per Crisil this time around, and that's the outlook that they have for the global as well as our own economy. On that note, we'll slip into a quick break then right here on the show. Do come right back. On the other side, we'll focus a little more on individual stocks and sectors that are holding out and get you some top technical recommendations.